Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in financial documents. And today we're diving deep into Algorhythm Holdings Incorporated, or RHYME, to uncover what their latest filings reveal about their game plan and financial reality. Before we dive in, if you appreciate getting straight insights from corporate filings like this, make sure you are subscribed and hit that notification bell so you don't miss our next deep dive. We also have a growing Discord community where we discuss these findings and much more linked in the description below. This filing is an amendment to a registration statement for a company that is looking to raise some serious cash or let some existing stakeholders sell off their shares. Think of it as a big public announcement about their finances and future plans. Now, Algorhythm Holdings Inc. is what the SEC calls a non-accelerated filer and a smaller reporting company. This basically means they don't have to share as much detailed financial information as the giants in the market. But trust me, we'll still find the juicy bits. The company is essentially an artificial intelligence technology holding company. Their main focus currently is on SemiCab, their AI-enabled software logistics and distribution business. They used to have a second business singing machine, a consumer karaoke products business, but they sold that off in August 2025. So now it is all about logistics powered by AI, an interesting pivot given the current market trends. A significant move they made was acquiring SMCB Solutions Private Limited, an Indian company, on May 2, 2025. This acquisition cost them $1.75 million, evidenced by a promissory note, and shares of their own stock, all aimed at expanding their SemiCab AI logistics and distribution business into India. This shows they are serious about expanding their geographic reach and integrating AI into their core operations. Then there is this private placement with Streeterville Capital LLC for up to $20 million. They're selling shares of their common stock a bit at a time. This is a common fundraising strategy, but it comes with risks like share dilution. A key detail here is the purchase price, which is 90% of the lowest daily volume weighted average price during a 10-day period, but not less than a floor price of 10 cents. This could mean existing shareholders might see their ownership percentage go down significantly, and the stock price could get pressured if Streeterville decides to sell a lot of shares quickly. This is a big deal for existing investors and something we constantly see in companies trying to raise capital quickly. And that potential for dilution is one of the big risks they want you to know about. Shares purchased by Streeterville might be issued at a price significantly below the market price. This can lead to substantial dilution for existing shareholders and a decrease in the stock's price. They're essentially saying that Streeterville might be getting a much better deal than new investors, and this could be a problem. Now let's talk finances. This is where things get really interesting. They've had a history of losses. For the 6 months ended the 30th of June 2025, they reported a net loss available to common shareholders of $9.77 million. This is on top of losses for the full year in previous periods. The auditor even flagged substantial doubt about their ability to continue as a going concern. This is a serious warning sign that means they might struggle to pay their bills in the near future if they don't find more money. And they are very upfront about it. They will need to raise more money. They say their current cash resources won't sustain them for the next 12 months. This means more stock sales or debt financing, which could lead to even more dilution or impose restrictions on their business operations, all classic signs of a company in a growth phase, but also a precarious financial position. Let's look at some key numbers, starting with their balance sheet as of the 30th of June 2025. They had about $1.1 million in cash. That is not a lot when you consider their reported debt, which stands at approximately $9.88 million. Their total assets were around $12.6 million, but their shareholders' equity deficit was a negative $10.5 million. This negative equity highlights that their liabilities far outweigh their assets from a shareholder perspective. Now let's look at their income statement for the 3-month period ending the 30th of June 2025. They reported net sales of $2.7 million. That sounds okay, but their cost of goods sold was $1.76 million, leaving a gross profit of only $954,000. When you factor in their operating expenses, which were $1.73 million, they ended up with a loss from operations of $782,000 for just that 3-month period. That is a trend of losing money that we see echoed in the 6-month period as well, where their loss from operations was $3.59 million. For the 6 months ending the 30th of June 2025, their net loss available to common shareholders was a whopping $9.77 million. This is a significant amount and reinforces the ongoing concern about their profitability. Looking back at their audited financials for the 31st of December 2024, it is a similar story. They had $7.5 million in cash, but liabilities were over $28 million. Their total shareholders' deficit was a negative $10.5 million. The warrant liability alone at that time was over $16 million, which is a huge number and shows a significant financial obligation. In the year ended the 31st of December 2024, they reported net sales of $23.4 million. This sounds healthier, but their cost of goods sold was $18.7 million. Then their operating expenses exploded to $18.7 million, primarily driven by an impairment of goodwill, a massive $3.59 million write-down. This brought them to a staggering loss from operations of $13.9 million for that year. This goodwill impairment is a big red flag. It means that the goodwill they recorded when they acquired Semicab Inc. was worth much less than they thought. Essentially, they overpaid, or the acquisition has not performed as expected. It is a sign that their AI logistics venture is facing significant challenges integrating or generating value. They also flag a major risk about their discretion over the use of proceeds from their offerings. This means they could use the money for something you as an investor might not agree with. That is always a concern when companies have broad control over how they spend investor money. And then there is the dilution from the exercise of series of warrants. They're upfront that this will significantly increase the number of shares out there, which naturally dilutes everyone else's ownership percentage. This can reduce the value of your investment in existing shares. Overall, Algorhythm Holdings Inc. is making bold moves with its AI logistics focus, but it is a high-risk, high-reward situation. They're in a competitive logistics industry facing regulatory pressures and have a history of losses. The key for them will be executing their AI strategy, effectively scaling Semicab, and managing their finances prudently to avoid further dilution or financial distress. So what is my take on Algorhythm Holdings Inc.'s latest filing? They're clearly betting big on AI-driven logistics, with Semicab showing a clear strategic shift away from consumer products. Their acquisition of SMCB in India is a clear attempt to expand their international footprint. However, the massive losses, the negative shareholders' equity, and the auditor's going concern warning cannot be ignored. The reliance on ongoing capital raises, especially through potentially dilutive means like the Streeterville Agreement, presents a significant risk for current and future investors. While the AI logistics market is promising, Algorhythm needs to demonstrate a clear path to profitability and sustainable growth. The goodwill impairment is a stark reminder of the challenges in integrating acquisitions and realizing their value. It is a company with ambition but currently facing serious financial headwinds. Alright, that is our breakdown of Algorhythm Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.